When money gets tight, the first bill people skip is the one that costs them the most later. The credit card, the car payment, the small stuff. It feels like the smallest fire, so it gets put out last. And that one skipped payment can follow you around for the next 7 years. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Today, we're talking about credit, specifically how to protect it when life is doing its best to wreck it. Most people think a credit score is a number that decides if you get a loan. That's a small version of the truth. Your credit score also decides where you can rent. It decides what you pay for car insurance. It decides what your cell phone deposit looks like. In some industries, it even decides if you get the job. Your credit score is a tax on your future. A high score is a refund. A low score is a penalty. And the penalty compounds. Here's the part nobody likes to hear. Payment history is roughly 35% of your score. One 30-day late payment can drop a 760 by 80 to 110 points. That single late payment can sit on your credit report for up to 7 years. 7 years for one missed due date. So what do you do when the budget gets thin? First, you stop guessing. You actually look. You pull your credit reports from all three bureaus, Equifax, Experian, and TransUnion. You look at every account. You look at every late mark. You look for anything that does not belong to you. If you've never pulled your own credit report, if you'd be shocked how often there are errors sitting on there, quietly costing you money. That is exactly why I share a tool called rsrlinks.com/FICO. rsrlinks.com/FICO. It's how you check your real score and your real report without guessing, without damaging anything. Second, you pay the minimums. Always the minimums. I know that sounds obvious, but here's the math that makes it matter. Your credit card minimum, is $75 and you skip it. You trigger a late fee, an interest rate bump, and a credit score hit that may cost you $50,000 over the life of your next mortgage. That $75 payment is the cheapest insurance policy in your house. And the timing of when you pay it matters more than most people realize. If you want to see how to use the calendar to your advantage on credit card payments, go to rsrccpayments.com. rsrccpayment.com. Same minimum payment, dramatically different impact on your score. If you cannot make the full minimum, pay something. Pay partial payment is not the same as a missed payment in the eyes of your lender. It tells him you are trying. That matters. Third, this one is the most people skip out of pride. Call your creditors before you are late, not after. Lenders have hardship programs you've never heard of because they do not advertise them. Lower payments, payment pauses, a new due date that lines up with when you actually get paid. They want to keep you as a customer. A defaulted account is a worse outcome for them than a modified one. But you have to ask. And when they say yes, you get it in writing. Not a phone call, not a promise in writing. Save the email, save the letter, save the chat transcript. If your account gets misreported 6 months from now, that piece of paper is what fixes it. Here's the contrarian piece I want you to take home. Protecting your credit during tough times is not about being a perfect borrower. It's about being a visible borrower. Lenders forgive customers they hear from. They punish customers they have to chase. Let me give you a quick example. A family I know on paper had a household income drop because of a job change. They had a $650,000 mortgage, 3 credit cards, and an auto loan. Instead of hiding from it, they called every creditor before they missed a single payment. 2 cards lowered the minimum for 6 months. The auto lender moved the due date. The mortgage company did not need to do anything because the strategy worked. Their credit score moved a total of 4 points during that stretch. 4 points, not 80. Same family who hides, same starting score, same income drop, same bills. By month 4, they're down 140 points.
Ow!
Now, they cannot refinance, cannot consolidate, cannot move that debt anywhere useful. They are stuck. Their bad month became a bad 7 years. That's the difference between strategy and panic. So what does this mean for you? Strategy beats rate always. In this case, strategy beats stress. Look at your report, pay the minimums, call before you miss, get it in writing, keep the records. If you want a clean, simple framework for the next steps, the budgeting tools, the credit monitoring, the asset liability tracking, that keeps a tough season from turning into a tough decade, go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. One place to see what you owe, what you own, and what is moving in the right direction. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening. The Your Credit Matters brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free.